Hi traders, Adam Ryan here with Optic Trading, and welcome back to another trading tips video. In this video we're going to be talking about how to properly take profits. So this can be a little bit of a difficult subject for beginners, intermediate, even advanced traders on how to properly take profits. There's a lot of misinformation being thrown out in the trading community about how you should take profits, when you should take profits. So I decided to make a video to clear a lot of that up and help you guys understand how to best take profits. So first off, I'm gonna cover the misconceptions and the misinformation, and then I'll dive into the proper ways of how you should take profits. So first off, you'll hear, the break-even stop. You gotta lock in what you made, and for anybody who doesn't know what a stop is an order that you use that gets you out at a predetermined loss. So let's say you enter a market order at 70, your stop is at 69.90, so you have a 10-tick stop in crude oil. That would be $100 per contract. So you're willing to risk that. If the market hits that, then you're automatically liquidated. So it's a great way to manage risk, and all traders should be using stops. When it comes to the break-even stop, a trader will be in a position and the market will move, a few ticks or a little bit above, and then they'll take their stop and they'll move it to break even, or they'll move it to break even plus 1 or 2, so they lock in a little bit. And in my opinion, this is the second worst way to move a stop. The first worst way to move a stop is when the market's moving against you and you don't want to take a loss. So you just keep moving your stop down, hoping it'll turn around somewhere. And like always, it doesn't turn around, and then instead of taking a small loss, you're left with a massive loss. So that's the absolute worst way to move a stop. But the second worst way is a break-even stop. And that's because that's going to keep you out of reaching your full potential. That's going to keep you out of a lot of profitable trades. You're going to see a lot of the times where you move your stop to break even or break even plus 1. It takes out your stop and then it moves where you originally thought it was going to go. Now, the reason why this way is so bad is because if you think about your reward to risk ratio, it just gets totally flipped upside down. You'll see that you're going to take a lot of 1-tick, 2-tick winners, break evens, but when you're losing on your full stop. So if you're losing on 10, 20 ticks, and you're only winning on 1 or 2 ticks, you're not going to be profitable doing that. The reward to risk ratio is totally flipped. So these break-even stops, they may look good, like you're actually taking some winners here and there and you're not losing, but you're missing out on huge profits. So the break-even stop is not a good method at taking profits. The next thing that I hear a lot, and some of you traders might not agree with me because this has been said for years and years and years, and even professional traders are saying this, and it is that you shouldn't let a winner turn into a loser. You should lock in those profits, make sure that you're not going to have a big winner that turns into a loser. And the reason I don't agree with this saying is because this is what created this break-even stop thing. This is what created traders from moving their stop to a random place that has nothing to do with market structure or price action because of fear. They're scared to take a loss, so they want to lock that in, or they're scared that they're going to lose all these paper profits that they had because the market ticks a little bit against them. Oh, they move their stop, they get stopped out, the market moves to their target. So I don't agree with never letting a winner turn into a loser. I agree with letting market structure tell you when you should get out or when you should move your stop. Now, there is an okay time to move your stop, but it's based on market structure and price action, and not just, oh, I'm up 20 ticks, or oh, I'm up 1,000, I'm going to tighten that up. It's actually based on market structure and the right place to move your stop. So let's get to the correct ways to move your stop and take profits. So the first way is going to be the easiest and the best way, and that's you entries here, your targets here, the market goes to your target, you take profits. Very easy, plain and simple. And if you have a strategy, which you should have a strategy if you're trading, it should tell you where your entry, stop, and target is. So that's going to make taking profits very easy. Now, a lot of the time that doesn't happen. So what happens when it doesn't hit your profit target? Well, this is where I use acceptable exits. So I'll have a bunch of acceptable exits. Let's say you have 3 or 4 exits that if this happens, you're going to exit. If this happens, you're going to get out. If this happens, you're not only going to get out, you're going to reverse and go the other way. So I'll give an example of that. Let's say that I get long at 70 and my target is 71, and we're moving up and we get to about 70, 40, and then all of a sudden I see sell absorption, massive sellers coming into the market. Am I just going to sit in there and let it go all the way back? No, I'm not. I'm going to exit there, and if it's big enough, I may even reverse my position and go short. So you have to have these acceptable exits. Now, if you're a beginning trader or an intermediate, even if you're an advanced but you've never done this before, make sure you're writing these out, because in the heat of the battle, when you start trading, you're just going to throw these acceptable exits right out the window. So make sure you have them written down, you review them before they open, and then you review them once you're in the trade. So you get in the trade, okay, what's going to get me out of this trade? Look at your acceptable exits. Okay, if it doesn't hit my target, I can exit here, 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 here. If it does this, I'm not only going to exit, I'm going to reverse my position. So that's going to help you take profits at the best possible locations if you have these acceptable exits. Now, when can you move your stop up to lock in profits? There is a correct time that you can do this. Again, it's going to be based on market structure and price action. So I'll give an example. Let's say that I get long at 70, I have a profit target of 71, and there's a resistance zone at, let's say, $70.60. Now, based on my analysis, I think we're going to move through this resistance zone and hit the target, so I want to hold through it. So what I'm going to do is I'm going to wait for us to break through the resistance zone, and then I'm going to move my stop to about 5 ticks below that resistance zone to secure all this profit, because if we fail from here, then my trade idea is going to be invalidated and we're not going to make it here. There's a failure. So that's when it's okay to move your stop, because it's based on market structure. It's not just based on the fact that, oh, I need to lock in 20 ticks, or I'm up 1,000 for the day, I've never been this much, I better, move my stop. It's actually based on market structure. So the second instance when it's okay to move your stop, this is a little bit more advanced. So if you're a beginner or an intermediate trader, I don't recommend you do this, but if you're a little bit more advanced, you can get away with this next technique of locking in profits. So let's say this usually happens mostly on trends. So let's say we're in a trend, you get in near the open, we're quite a bit higher, you see a second setup, and you would like to enter a second position. What you would do is you'd enter that position, and where your stop is there, you would pull this stop up to match that stop. So now you've locked in all this profit down here, and you're trading on your second position. So the reason I don't really recommend it for beginner and advanced traders is because you're taking multiple positions in the same direction. So if you are not tight on your risk management, you could get into a lot of trouble. So make sure that you are intermediate to advanced if you're going to be using this. Preferably, I prefer that you're already an advanced trader if you're going to use multiple positions. If you guys would like to see some advanced risk management, some techniques that I use in my own trading, not really beginner intermediate, so they're not suited for the people just started out, but if you want to see some advanced stuff, leave it in the comment section down below and I'll get a video for you guys on advanced risk management. One final note before leaving you guys, I created this channel because I want Optics Trading's YouTube channel to be an educational resource where traders from all over the world can turn to for honest, actionable advice from a real full-time trader. Now, for me to accomplish that, I'm gonna need your help. So I'm gonna need you guys to be sharing the content, on social media or on your favorite forums if you enjoy it. If this content truly helps you out and you're finding valuable information here, then the best thing you can do is share and help other traders, because there's a lot of traders out there who need this information and who we can help, but we got to do it together. So if you find value in this information, go ahead, share that on social media, your favorite trading forums with your friends, your families, and be sure to comment on the videos and leave any questions or concerns you have or any kind of videos you want created, because if you have a question, chances are 20 or 30 other traders have the same question, but they're too shy to ask it, or they think it's a stupid question, or they don't want to bother me. And guys, there's no such thing as a stupid question. We're all here to learn. You're not going to bother me. That's why I have the channel. So go ahead, interact with me, ask questions, share the videos so we can help as many traders out as possible. And this community is going to grow and grow, and we're going to help as many traders as we possibly can. So that's a little food for thought for you guys. Best of luck with your trading, and I'll see you in the next video.